Hey everybody, happy holiday season. This is that time of the week or month or whatever where we talk about the I Got Challenge series. So the question that came up around this particular video is super interesting. The question is, do we need only Bitcoin or do we need altcoins as well? And this is one that I've been debating myself for a long time, over 5 years at this stage. And back in the old days, I was only Bitcoin. Now I dabble in other stuff. But why I love this series is we all need to always challenge ourselves, challenge our biases, keep an open mind as we go through this process. This is a lengthy 15-topic subject, extremely well laid out by a Patreon member. We'll talk about them in a minute. And again, a few weeks ago, I pointed out the energy usage of Bitcoin, and it caused quite a stir. It upset a lot of people, but this just shares facts, okay? No biases, so don't be angry at the facts. Let's jump in, and happy holidays to everybody. This doesn't matter at all. And how to challenge me? Join the community, patreon.com, invest answers. No matter what, I will accept any challenge, and I think it's so important. And I actually love this. So I want to thank our friend Airstyle for putting this together. Do we really need other blockchains and respective coins other than the Bitcoin blockchain? Airstyle put together an extremely detailed structure, laying out all the stuff I've been talking about for a long time. And we will come to a conclusion at the end as to whether or not we need altcoins. I'll also examine how I responded to each of his or her 15 points. So let's go. Let's start at the beginning. This is the very first point, and trust everybody's well out there. So first of all, it's about decentralization. Bitcoin is the only coin that is truly decentralized due to its proof of work mechanism. James showed that Bitcoin has a Nakamoto coefficient of 7,349. In comparison, ETH next highest has a Nakamoto of 34. That is a factor of 200 in difference. So it is a big difference as well. Thank you, Roy, out there. And, regarding energy consumption, proof of work, which many claim as being bad, the more energy due to proof of work is required. And we talk a lot about here, but for example, to do one transaction, he tries to keep his transactions close to zero. I won't read everything in great detail, but obviously they are concerned. Airstyle is concerned about his carbon dioxide footprint. But don't forget, one Bitcoin transaction is about 700 to 2,200 kilowatts available and roughly equals the yearly electric energy consumption of one person in households in richer countries. So we'll look into that a little bit too. And finally, so this decentralized and safety aspect qualifies Bitcoin as the one and only crypto asset for either digital gold or world reserve currency that no altcoin can ever reach. So that was a big one. And yes, I will talk about a couple of points here. First of all, you're right. The Nakamoto coefficient is off the charts for Bitcoin because they have so many nodes. But many will argue you just need about 1,000 validators to be the tipping point to be truly decentralized. Or I like to say above kind of 20 to 25 works too. You can see here, as I've covered before, Ethereum is number 1 with a score of about 34. Sol is number 2. Avalanche number 3, Cardano number 4. And again, many people think 25, 30 is sufficiently decentralized. But let's not get too bogged down in that. There is nothing as decentralized as Bitcoin, and nothing probably ever will be. So I agree with you there. Let's look at the energy usage. This is the Bitcoin energy per transaction versus Visa in the year 2022. And you can see here, one Bitcoin transaction burns about 2,188 kilowatt hours of energy, and 100,000 Visa transactions burn about 148 kilowatt hours of energy. So it's a very, very big difference there. And to put that in perspective, back to your household question, just to make sure it's all clear, per person per household, just to put 2,188 kilowatts in perspective, that is about 3.5 times the average monthly electricity bill used for a 4-bedroom home. For example, I pull this data from Shoreline Drive in Oklahoma City. I hope nobody in the audience lives there. But this is how much their actual usage is at about 15 cents per kilowatt hour. So that puts things in perspective. So basically, in summary, from the very first point, and this was a lengthy one, yes, on decentralization, I agree, but 30 is sufficiently decentralized. And regarding energy, It is actually a little bit less per transaction at about 3.5 months worth and not a year of energy. But if there are 4 people in the household, you could argue you were exactly right. But if it's one person in that big 4-bedroom house, no. And of course, the US does use a lot more electricity than the average home in other parts of the world. So we are on the same page in that very first point. Second point from Airstyle. Everyone can participate within the network. Everyone can buy a Bitcoin miner and support the blockchain to get more decentralized. But due to high energy prices, it is unfortunately not profitable for everyone. But in principle, there are no restrictions to participate. Very true. And this is not the case for all alts. For example, ETH, you need 32 ETH to become a validator, which is now already costly if you haven't bought ETH years ago. Very true. Let's dig into this a little bit. First of all, this kind of ties into the whole Bitcoin banning thing. If you look at all of the nodes, there are over 10,000 Bitcoin nodes around the world. The teal color here highlights where most of them are. But simply put, Bitcoin cannot be turned off. And you could argue later we will, other things can be. Also, back to the math of running a node. The cost to run a node, for example, on average around the world is at least $550 a year for a Bitcoin node. And it's approximately $7,700, $7,800 to run a mining rig. And this does price many out of doing this around the world. Now, back to ETH, running a node for Ethereum is about $3,600. So a little more expensive than a node for Bitcoin, but running a validator is often $50,000 to $100,000. And that is common across many blockchains as well. But many blockchains are trying to become more fractional in how they can empower people to become validators. So stay tuned for that. A lot of stuff will happen in 2023 across many top layer 1 chains. So this one, I kind of agree with you, but not really. There's a big difference between the kind of a node and a validator, or running a rig, being a miner for Bitcoin, etc. Next question. Airstyle says, cheap, quick, and low energy. Bitcoin is ready for fast, low energy, and low cost transactions. We have Strike and Lightning, which allow fast transactions, and no alts are required to solve that transaction issue. True, let's dig into a couple of things, because this is an interesting aspect. And a lot of people dinged Bitcoin in the past for not being a good enough payments network. But I did a couple of tests in the last 24 hours to validate this. First of all, I use both Strike and Lightning once a week, sometimes once a day, both to convert Bitcoin digital gold into an instant and low-cost payment network. Totally agree with you. It's being adopted now as well by many merchants as part of their payment ecosystem. Walmart, WordPress, Shopify, and more are jumping in, and their goal is to save that 2.5% to 3.5% on credit card fees, which is huge for a retailer, especially a retailer that survives on very thin margins. Your Costco's, your Walmarts, your Amazons, it's razor thin. If you can pull 2.5% out, wow. And that's going to come. And I think there's going to be a lot more adoption of that in the year 2023. Let's look at the Lightning Network app users. Again, this is from Arcane Research, a little bit old, March 2022, but the most recent one I had. There are 80 million Cash App users out there. And Lightning with Paxful and Shivo, etc., are really coming up fast. And I believe they'll get close, if not even eclipse, the Cash App in the very near term, which again is very positive. And that brings the whole payments narrative to Bitcoin that many people said was not possible. But let's go back to Ethereum for a second. Vitalik claims they are now competitive with Visa in his recent blog post. The merge ETH switched to proof of stake, obviously September 15th, and we all know what happened after that. But they reduced energy consumption by 99.9%. Block time every 12 seconds instead of a random number. And he believes it's already good enough to be competitive with a credit card. But my point is, being competitive with a credit card is not good enough anymore. Think about that. Let's give you an example. And I know people say, oh, he's just pushing something. But I did this. I moved $500 in Bitcoin and $500 in Solana to 2 different chains. The Bitcoin transaction cost 45 cents. This is what the Solana transaction cost. 0.000006 of a dollar, which is very small. Just to put that in perspective, everybody, the cost is so small, I could do 166,600 transactions for $1. on this Solana network. That's moving $500. Also, the speed is much faster. Bitcoin takes 10 minutes. This is instantaneous. So that is one of the areas where I do believe layer ones can scale at a much faster rate and at a much more effective and efficient rate too. Next question is Bitcoin as a world reserve currency. It is the only coin that people see as having the future potential to either become world reserve currency or backing the reigning reserve currency. I know no altcoins where people see that type of potential, and this is why regulations are important to allow Bitcoin to take a more dominant role in our damaged financial system. Very true, and this is probably one of the best questions you have here. First of all, when we look at money, Bitcoin is better money. I like to say it's the hardest money of all, because if we look at fiat, and money has to have three different ingredients. 1, medium of exchange. 2, unit of account. And 3, store of value. You can see here, fiat is not a good store of value because it debases by at least 5 to 14% per year, which sucks. Bitcoin, you could say, yes, it's very volatile, but as a store of value over time, it's proven to be far better than fiat. Basically, every 25 years, your fiat will disappear in terms of value. Now, let's look at another chart that stacks up everything together and why many believe that Bitcoin is better than both gold and fiat, because we're on that topic right now. You can see Bitcoin is durable, divisible, fungible, portable, verifiable, and super scarce. Fiat is not scarce. Fiat is not verifiable. Fiat is not fungible. Fiat is not durable. But what they do have, though, like gold has an excellent track record. Fiat typically lasts between 60 and 100 years, and that's where we are. Also, because Bitcoin is so new, it's only 12 years old, it doesn't have a very long track record either, so it gets dinged in that element. But that's a good, simple refresher as to where we are. Now, dovetailing into that gold narrative, and that's why I mentioned gold there, Airstyle says Bitcoin has that digital gold narrative, and it is the only coin where people out there see the potential in the future of becoming gold 2.0. Gary Gensler wants to label it a commodity which supports that narrative, which potentially means it could also back the reigning reserve currency. And there is currently no other coin right now to which this narrative, digital gold, not even potentially applies. I agree. There's a couple of very interesting angles there. First of all, let's go back to what you said. Having that branding is critical. The commodity branding, not a currency. Because back in the days, money was backed by a hard asset. For example, during the Roman times, silver, content of the denarius, was, of course, diluted over time. It used to be 100% silver, and then they started depleting it to basically be nothing. This is exactly what happens to fiat. So that silver coin became fiat, even though it was supposedly backed by something hard like silver. And the digital gold narrative takes us back to square one, which is taking us back to where we need to be, a non-fiat world. Pre-1971, the US dollar was backed by gold. Of course, it wasn't really. There was only about a quarter of the gold reserves for the amount of money that was out there, but that's ancient history. Let's look at what has happened to another step back in history. The last 120 years of global reserve currency development. You can see here with the advent of the petrodollar in the 1940s, 1945 when it started, you can see the US dollar became the global reserve currency. But what's happened really over the last couple of years especially, a big dip down. Hence the blue arrow up and the blue arrow down means the US dollar is falling out of favor. And all of the so-called frenemies, enemies, whatever you want to call them, of the US want to get off the world sucking on that dollar hegemony. And that is already happening, especially since the beginning of 2022. You can see the euro has a little uptick, but they have their own set of problems as well going forward. So basically what this tells us is there is room for a change here in this picture, and history shows things do change. So dovetailing into that, there's a third part which is addressed by this, and I'll get to the end conclusion of where you were coming from in a second. But adoption and worldwide interest. Retail is interested in Bitcoin since day one. Yes, true. BlackRock is interested to offer Bitcoin for its customers. Yes. Banks are asking to get permission to hold some Bitcoin within their portfolio. Yes. And countries interested in Bitcoin, and a few countries slowly are starting to adopt Bitcoin. Yes, although they're being small, but they are definitely doing that. Now, the question is here, is the SEC wouldn't act the way they are if the US is not planning something with Bitcoin. I'm not sure I agree with that. Let me explain why. First of all, back to one of your points, there was a piece of news 5 days ago, which is very overlooked, but Basel, the BIS, which is the Bank for International Settlements, gave a huge crypto endorsement. Now, it may sound small, but it is an endorsement. So they basically, in order to mitigate risk, that's what BIS does, things like Basel II standards, etc., is to help have broad safeguards, safe, lines in the sand of how a bank needs to operate. But here you can see now they have let it out in stone that for Group 2 crypto assets, a bank's total exposure must not exceed 2%, and of Tier 1 capital, it should generally be 1%. But if you imagine all the banks in the world allocating towards a crypto with these amounts of money, that is staggering. So that's a positive. Now, getting back to where I think is a big negative, and this ties into the previous 3 points, is governments like to have control and they like to print their dollars. And the reason, it is a very powerful government tool. So if you look at just US government debt alone, and every other country is the same. Look at what Japan just did yesterday. US government debt will explode to nearly 1,000% of GDP. So having a hard currency, there's no way that they can explode their deficit if they have a currency backed by Bitcoin. They simply can't do it because they lack so much control. And what dovetails into this is this piece here. If you look at the explosion in the yellow line here, these are transfer payments. This is how government officials get elected, because they give handouts back to people. And if you look at that deficit, again, exploding in red over time versus receipts, non-tax and tax receipts in blue, obviously, the unfunded liabilities of 175 trillion are just going to explode. Therefore, I think governments need to still have that money printer. And that's why they say, 2% is our goal. There should be no inflation, no debasement when you have a truly hard asset. It should only be appreciation of time. But anyway, that's a separate issue. That's where we're going. That's why I believe governments will not move to a Bitcoin standard. It would take away too much control and it would prevent them from being re-elected because they wouldn't be able to play their central bank games anymore. Next is regulation, which again is also related. Bitcoin should not be exclusively available for one group, but available to everyone. Yes. Regulations need to be in place. Yes. This pushes Bitcoin one step closer to maturity. Yes. And despite future regulations, nothing can hinder your transaction, no matter what your origin, political views, religious views, sexual orientation, etc. And I'm not sure that this is possible for alts. So for example, when Russia attacked Ukraine, people were explicitly asking for Bitcoin and ETH, if I recall, you are correct, and which both back then were based on miner activity, not any alts. You are correct. But I think that's more because they were kind of the two standards. And the only thing that politicians can control is the Bitcoin environment, etc. Prohibit exchanges to send Bitcoin to your wallet, ban miners from their countries, etc. But they can never ban Bitcoin itself. So this is true. I do believe Bitcoin is morality, the most moral money. But in some cultures, it is not acceptable. For example, currencies are originally a medium of exchange, and making them a tradable commodity for profit earning is against the philosophy of Islamic economics. So it depends on religion. So counter to your point, not all places is it acceptable. In addition, we have our lawyer friends. Funnily enough, I touched on this yesterday. Senator Elizabeth Warren introduced the Digital Asset Anti-Money Laundering Act, which imposed sweeping surveillance and register requirements of all software developers, miners, wallet creators. And the bill would also effectively ban any privacy-enhancing technologies in the blockchain networks. The good news is, because this violates civil liberties and privacy, it'll never happen. But again, you see here government officials still try and kill it. Now, let's look at the government and talk about alts. In terms of one of your things, we know Bitcoin cannot be shut down by the disbursement of the nodes. But if you look at ETH, The government could potentially call Amazon Web Services and shut down in one phone call half of all the ETH nodes. So that is important. Other ones, DigitalOcean, Hangzhou, Alibaba, etc., they can all be impacted. So this is true, not for Bitcoin, but for alts. And you're dead right in that regard. Next is Bitcoin survives and thrives. Bitcoin survived the block size wars, and all those who wanted to manipulate Bitcoin, thinking their version of Bitcoin would be better. And Bitcoin is furthermore operating stable, and hash rate is at all-time highs, which shows more confidence of the miners. And after so many years, Bitcoin is still in a technological uptrend, a history that no other alt can attest to so far. And most alts are just dead after their first instant. And yes, this is partly true. In fact, backing this up, again, this is the 3,000 cryptocurrencies that listed on CoinGecko in 2021 have failed. Another 17, 18,000 to go, because I do believe, like you, a huge percentage will go to zero, 98, 99% over time. But getting back to your question, do we need them? Can other alts survive? Only time will tell. Ethereum is around 9 years, so it's actually lasted the test of time, but a lot of people have issues with the fact that Ethereum is proof of stake, which is like the Cantillon effect, like big governments like Fiat, those closest to the money printer, those with the most amount of stake, call the shots, and people don't like that. So let's talk about the Bitcoin Only-Wallet. A Bitcoin Only-Wallet is available in the market, implemented by Bitcoin core developers for maximum safety, minimum amount of code, etc. Of your Bitcoin. None of the alts have this type of only wallet safety feature. This is true. In fact, a few months ago, we did a session on how to build your own DIY wallet on a budget with SeedSigner. You need about $50 in equipment, and you could make it a weekend project. And again, it has extremely basic components that limit the attack surface. The code is very simple and open source, and it only supports Bitcoin. So I totally agree with you there. And wallets, by the way, wallets are key to adoption as we go forward, that we always stress here too. Next, fixed supply and deflation. There are only 21 million Bitcoin available. James mentions probably much less. I believe there'll never be more than 14 million due to people losing their keys, etc. And this is not a Bitcoin exclusive thing, but in combination with other strong arguments for Bitcoin, it's just another pro on top. I agree. Let's dig into this a little bit. According to Cane Island Digital Research, 4% of circulating Bitcoins are lost every year. I actually assumed if we just had a 1% drain, not 4%, just a quarter of that through 2048, you can see the total supply of Bitcoin would fall to only about 12.38 million from where it is today. And calculating that in terms of Satoshis per human on Earth, that would be having 124,000 Satoshis, or today that's $20 worth, would put you in an average person league. So interesting stuff. But yes, the supply will go down because people are losing their Bitcoin at a faster rate than it's being mined. And there's not much left to mine, less than 1.7 million Bitcoin. Next question, distribution of coins. This is one of the very few points I do not like about Bitcoin. But most other, if not all, altcoins and fiat are suffering from the same problem. Coins are badly distributed among all addresses, which makes it prone to manipulation. I know James thinks that this will get better in the future, but I am not 100% convinced. And my guess is that the distribution will happen among those people who own a fraction of Bitcoin, maybe among those with less than 1,000 Bitcoin holders. But just check the top 1,000 richest Bitcoin addresses. Most of them have barely any transaction listed. And if one whale starts to move coins, the world immediately is in panic. But all suffer the same issue. Yes, we have covered things like, 68% of all Matic is held, or 69% within 12, 13 different wallets. So there is that heavy concentration in other alts too. But the good news, in counter to your point, the Bitcoin held by retail, which means less than 10 Bitcoin, is at an all-time high of 17%, and it's going up fast. In addition, I covered yesterday briefly the aggregate cohorts across all of the different groups, less than 1 Bitcoin, 1 to 10 Bitcoin, etc. And you can see there is a big move from that 10 to 100 Bitcoin holders. And I believe they're going to surpass that 1,000 to 10,000 Bitcoin holder group, which used to be the whales. that controlled all the shots. They are about to be retired, and the new cohort of 10 to 100 Bitcoin will be there. Now, the interesting thing is, obviously, this cohort is kind of all floating coins over time, but all other groups are accumulating, which is good. And this is also the most widely dispersed coin I can find. So there are more users, more wallets than anything else. So it's as good as it gets right now in terms of benchmarking against other cryptos. Next, alts and the fiat incentive. For some reason, a lot of alts behave a lot like our current fiat system, which we consider as damaged. Rewards, interest rates, no max supply, inflation, airdrops, etc. Thus, to me, it seems that all these alts are just like alternative fiats that survive in their own alternative reality created for them. So let's look at this. And this is a huge problem that we zoned in on when we began the channel, is analyzing token inflation and tokenomics and equity of distribution, etc. They're so important. So I'm glad you focused on that. This is the latest pull from Masari, the smart contract platform inflation. I just looked at smart contracts, and you can see here top of the list is Algorand at 23%, Avalanche 22.86%, Flow 21.44%. These are and Near Protocol 19.4%. These are extremely high inflation numbers and bring about a lot of price suppression. You have other names down there: Phantom 8.46, Harmony 6.13, Solana just fell under 6%, it's now 5.99%, and Cosmos. And if you go down, the longer a token has been out, like Tezos, Cardano, Ethereum, the less inflation they have. Tezos 3.96%, Cardano 1.88%, Ethereum is now 0.54%. And of course, that is even lower than the Bitcoin inflation, believe it or not. So from that perspective, you're right. Watch for inflation, everybody. It's very important. Let's look at dApps and NFTs. dApps and NFTs could be a showcase for other blockchains. However, can we ever call a dApp if there is no chain except the Bitcoin blockchain, which can be seen as decentralized? True. And the big question always is, what are the odds that a specific chain will still exist in 10 years? Huge question. Sometimes it's very hard to go out more than 10 years, but even thinking 3 to 5 years is important for everybody out there. And nobody knows if Bitcoin will exist in 10 plus years, but it definitely has the highest chance. I agree with you there too. What happens then to dApps or NFTs if a blockchain disappears? This is the biggest struggle I have with alts. Great question. So first of all, dApps do die. We've seen a lot of dApps die this year. They run out of money, they run out of users, etc. And NFTs can be very illiquid. So you do not want to buy any asset or has any asset on a chain that is a ghost chain or shrinking or not growing. This is a huge risk. And only use the biggest and best of chains that have the highest adoption. That's another thing we always focus on here. And they have a high chance of lasting the next decade. But again, anything could knock them out. And the question is, how will the lack of liquidity in the NFT marketplace play out in the long run? It remains to be seen, but that is a huge issue. Any asset you buy needs to be liquid. That's one of the dangers with NFTs that can be minted millions. You know, Joe Schmo can mint 10,000 NFTs and sell them all, obviously. And then the next day, maybe another 10,000. That's the problem. So make sure you get hard assets that are very rare. Next is Bitcoin risks. Airstyle says the two risks which are bothering him is, or her, I'm not sure, companies like BlackRock can buy miner shares, for example, Hut 8, and Bitcoin price stagnates at some point and could flush out many miners, thus losing its decentralized labeling. Second, a third risk is that no one knows what will happen to the 1 million Bitcoin from Satoshi, and it's not clear what would happen to Michael Saylor's bag, who is doing a great thing for the whole Bitcoin space. I can answer those two pretty easily. So first of all, miner risks. The beauty of miners, and I always say it's a cutthroat business, but other miners will always step in. So, and there was a story on Bitcoin Magazine back in April 2022 that they believe the hash rate has stagnated. No, it hasn't. It's still breaking all-time new highs. And in terms of cutthroat business, Core Scientific declared bankruptcy last night. So it is definitely hard. But again, anybody at home, it's such a beautiful market and such a self-balancing mechanism that people always step in when there's an incentive to do so. Regarding Satoshi, a couple of things here. One, He has 1.04 million Bitcoin. I believe they will remain dormant forever, or potentially at least quantum computing could hack his keys. But again, on that note, everybody, don't be alarmed. I do believe the system will be hardened to be quantum proof before we get to the year 2028, when this could be theoretically possible. So don't sweat that, everybody. And second, regarding Saylor, he has pledged his holdings to the Saylor Academy. That is his gift to the world. So not concerned about that either. Finally, alt gains. The only real application for alts at the moment is to benefit from their gains, to be able to buy more Bitcoin even faster with alt gains. That is a solid strategy for sure. But taking a step back, it all goes back to Metcalfe's law and adoption. So the faster the development, the more value created, and the more value created, the more users, and the more users, the more value of the actual chain itself. Now, what I mean by this, the number of developers on other blockchains is far higher than Bitcoin. Therefore, I do believe more value can be built into other chains beyond just store of value and payments to do a whole bunch of different stuff. And that will drive more users, which will bring about much bigger network effect, which will increase the value of the blockchain. That is key. Now, the winning layer one, or the winning blockchain, will be the first to onboard 1 billion users. I've been talking about this for a while. A lot of leaders of now blockchains are beginning to jump on that same narrative. This always came from the original Solana goal. Now Vitalik Buterin's talking about 1 billion users as well. So the race is on. Which chain, whether Bitcoin or others, will hit 1 billion users first? And that is it. The chain that has a wallet with 1 billion user wins the day. Therefore, you could argue you need to have some alts in your bag. So conclusion, what I did was I mapped out all of your 15 questions where I agree, where I disagree, or where I am neutral, like on the fence. And this is what it looks like so far. So here you can see decentralization, I am neutral. Participation, I agree. Quick, cheap, low energy, I disagree. Reserve currency, I believe it's possible, but it'll be difficult because governments don't want to give out that money printing power that they have to get votes. Digital gold, I agree. Adoption, I agree. Regulation, I'm neutral because, again, I can't see governments giving up their power to print money. Bitcoin survives, I agree. The Bitcoin Only-Wallet, I love it. Bitcoin deflationary, I agree. Distribution of coins, I disagree. I think Bitcoin has the fairest distribution of coins. And altcoin inflation, I agree. dApps and death, I agree. If they do die, you're toast. So make sure you are using a chain that is going to be around for the next 5 years. And Bitcoin risks, I disagree with some of them. And alt gains, I disagree too. So basically, 60% of the stuff we agree on, 26.7% we disagree, and 13% we are neutral. So everybody, I love this. I really appreciate the brilliant questions from our friend Airstyle. Keep them coming, everybody. I hope you like this show. Again, there's a reason I have, it's not too dissimilar from this pie chart here. I am over 80% Bitcoin, but I do have altcoin holdings. And I believe there is a place for both in a portfolio, although the store of value is a heavy part of my allocation, and that is in Bitcoin. So with that, everybody, again, do your own research. Hope you enjoy the information. And let me know if you agree or disagree with any of these 15 points, because somebody out there may know a lot more than Airstyle or me myself knows. So we're always willing to be challenged and learn from you all. So thank you, everybody, as well. And everybody out there, happy holidays. I'll see you all soon. And thanks to the mods in the chat.